it's going to get more and more difficult for those people to make it. I pulled up some of the home builders today, and this is another ominous warning of where we're at as far as housing. And I looked at the year-to-date numbers with regards to stocks. If you look at Toll Brothers stock from just year-to-date, it's down 33%. Year-to-date, Pulte Homes down 22%. D.R. Horton is down 30% year-to-date. Lennar down 29% year-to-date. KB Homes down 20% year-to-date. What is this telling us? You know, we keep hearing about shortages. There's just not enough homes. They're building so many homes, ladies and gentlemen. So many homes under construction right now. So many people who are going to be unable to make those mortgage payments because of a cash flow, loss of job, spouse loses a job, inflation problems. An emergency comes up, as we know, 6 out of 10 people in this country, they don't even have $500 saved up. So some of these people own homes and they don't have $500 saved up. And if an emergency arises, how do they make the mortgage payment? Big trouble is coming in housing. Article from Market Watch. Fed may need to even be more aggressive fighting inflation as U.S. household cash exceeds debt for first time in 3 decades, warns Deutsche Bank. I think Deutsche Bank must be delusional here. We just looked at the data the other day. 6 in 10 Americans don't have $500 saved up. We look at record credit card debt, record credit card use. It's soaring. We look at college tuition debt at what, $1.6 trillion. We look at record household debt, buy now, pay later plans. We have, I think we've never seen in the history of the U.S. where people have been so broke and so dependent on credit. Personal loan usage up. We see payday loans going up. People now, 20% of this country can't even make it to Friday for their paycheck because they're already broke before Friday. They can't even go till Friday without already spending their entire paycheck, which is pretty much going to paying bills, debt, and essentials. But yet Deutsche Bank says everybody's flush with cash. I highly disagree with that. Again, buy now, pay later, personal loans, payday loans, credit card use. 1/3 of all U.S. workers make $15 or less. I'm paying over $6 for a gallon of gas here. You look at rent costs, you look at the average mortgage payment now, you look at the cost to buy a home, you look at the cost to buy a head of lettuce, a pound of chicken, a pound of hamburger, a pound of steak. 1/3 of all U.S. workers make $15 or less. And as I said, 20% can't even make it to Friday. But yet, Deutsche Bank says that household cash is exceeding debt. Give me a break. CNBC. Jerome Powell says taming inflation absolutely essential and 50 basis point hike possible for May. Possible, I would say guaranteed. He said aggressive rate hikes are possible as soon as next month. Expect 50 basis points, ladies and gentlemen. It should be much more than that. It should be minimal, 75 basis points. It should be a full percentage point, in my opinion. He says it's appropriate to start moving a little more quickly. He's so late to the party. He should be raising rates yesterday. So late, and it's going to really, it's not going to do much, but it will affect when you need to borrow money. It will affect when you use your credit cards. It's going to affect anybody who needs to borrow money to buy a house, to buy a car. This is going to affect the consumer. It's going to affect the average American, rich, middle class. It's going to cost more to borrow money, ladies and gentlemen, but I no doubt would pretty much say guarantee we're going to see a 50 basis point hike in May. And now get this, they're talking today. And I got to say this, I'm watching some of these financial shows today, and there were some people on there really showing some concern about where this is all going, and that people better wake up and get prepared. And I was really shocked that some people actually came out today and really showed concern. Now, yes, the regular cheerleaders are out there telling us that everything's going to be fine. You should be buying, buy the dip. That the market's gone up more than it's gone down this year. We've had more highs and lows, so that's a great sign. So just buy. Of course, the regular cheerleaders out there, but there were some guests on today who really showed some concern and really believe that we're heading into a real serious recession here. I believe the recession is well on its way and that we're already beginning a depression, but really seeing some concern today. And when you watch this stuff, you just ask yourself, why is the Fed waiting? And how bad is this going to get? And we've talked so many times about when friends and family come knocking at your door for help. And there's an article here that came out last night on CNBC. Don't immediately reach for your checkbook. Here's what to do when relatives ask you for money. Yet Deutsche Bank just told us that everybody's flush with cash, but here's an article telling you what you should do when relatives come knocking at your door for help, for money. And the expert's advice: don't rush into a decision. Take some time before jumping into action. Don't immediately reach for your checkbook. Well, I can tell you this: don't worry, I will not be reaching for my checkbook. I'm warning people right now that this situation is going to happen to most of you. And I've made videos in the past about this, and now CNBC is actually doing articles about it. And I'm prepared to say no. We have been warning people, you've been warning your family, your friends, and these are the same people who have judged us, criticized us, in some cases made fun of us. And now these are the same people beginning to get worried. These are the same people who are multiple months behind on their credit card payments, their auto payments. They're in student loan forbearance. They may be in mortgage forbearance. And the writing is on the wall, ladies and gentlemen. And now some of you have probably already been contacted. Some of your relatives or friends have probably already asked for help. Comment down below. Let us know if this has happened to you. And if this were to happen to you, are you prepared to say no, or will you help these people? Nothing wrong with that. But with people in my family and my circle of friends, they know where I stand. And most of the people that I am friends with are awake. They're preparing, and I don't have to worry about them asking for help. But there are people out there that I personally know who have done absolutely nothing except continue with the party, continue living for today. And I cannot feel sorry for these people. When this thing implodes, there's no, I mean, it's going to be a horrible event. And my heart goes out to people, especially people with kids. But just like all of you, I've had to make sacrifices. I've had to live below my means. I've had to put a lot of things on hold. And, when I buy gold, could I go and take a trip to Hawaii? Could I go travel? Could I go buy a toy? Yes. Is gold exciting? No, it's beautiful, but I buy it. I put it away. I don't look at it. I don't think about it. It gives me no real satisfaction other than knowing that I have insurance. But there's no enjoyment. There's no fun. It's not like, flying down the river in a fast boat or, going to an exotic resort somewhere. It's not satisfying in that sense, but it is satisfying knowing that you have insurance and that when this thing does implode, you have real purchasing power, you have real money, and you have insurance. But other than that, there's no excitement, right? Whereas people want to live for excitement today. They want to take a trip to Hawaii. They want to take a trip to an exotic place or an island. They want to, they want to go somewhere. They want to, drive a car beyond their means. They want to go to the store. They want to buy beautiful clothes and beautiful jewelry and beautiful watches. And there's nothing wrong with that if you can afford to do it. Don't get me wrong. Everybody likes having nice things. Unfortunately, most people can't afford these things and they buy this stuff. I mean, they're even financing jewelry, which they've done for many, many years. But I mean, if you can't afford to pay cash for a watch or a piece of jewelry, take my advice, don't do it. That's going to be a very, very bad move. But this instant gratification that we have in society today, that I want to go on a trip next week, I want to go shopping today, I want to go buy a big screen tonight, and if I don't have the money, I'm just going to use plastic and charge it. These are the people who will be knocking at your door. And what do you tell these people? I'm going to tell these people, I'm sorry. I won't even open the door. It's going to be locked. I've got to look out for me, my circle of friends, my family, and that's just the way it is. And we need to get in the mindset right now that, hey, you right now need to be preparing because you're not coming to my house. You're not eating my food. I'm not giving you my money. I made huge sacrifices to get where I'm at right now to protect myself from this financial collapse. And for the people out there who haven't, that's too bad. I'm not going to feel sorry for you. Don't immediately reach for your checkbook, ladies and gentlemen. That's my advice and the advice there on CNBC. The Hedge. We hope you enjoyed your ride through Fantasyland. Now watch your step as you exit. This goes to those same people who will be knocking at your door. Let's take a look at this list in this article. The economy and equities can grow forever. This is the fantasy land that people are living in right now, and why they believe that they can live today, not worry about tomorrow, why they believe they'll never ever have to knock on your door, but they will. The economy and equities will grow forever. There are people that believe this. Higher energy costs have zero effect on the economy and stocks, right? The Federal Reserve will deliver a soft landing, which reduces inflation back to near zero while the economy and stocks continue lifting higher. Higher food costs and global food scarcities have zero effect on the economy and stocks. Supply chains unraveling has zero effect on the economy and stocks. Deglobalization has near zero effect on the economy and stocks. Higher interest rates have near zero effect on the economy and stocks. There are no speculative bubbles in housing, stocks, or other assets. And the last one, even if there is a bubble, it won't pop. This is the fantasy land that people keep buying into. Doubling, tripling, quadrupling down in these markets. Buying a home today. I don't give financial advice. If you want to buy a home today, go buy it. God bless you. I wish you the best of luck. I hope it goes up 20% by next year. It's not going to happen. But this is the fantasy land that people are literally brainwashed believing that this fantasy is never going to end. And it's ending right now, right before your very eyes. Take a look at this economy. It is crumbling right in front of your eyes, ladies and gentlemen. Another article from The Hedge. Americans are spending more, getting less, and borrowing more for it. Retail sales up 7% in March. The problem is you had to spend more to get less. Americans are turning to plastic. Yes, they are turning to their credit cards to keep up with these surging prices. Somebody wrote yesterday saying that you can't pay rent with a credit card. Of course you can pay rent with a credit card. Most of these rental agencies accept credit cards, and if they don't, many of these people just do a cash advance and pay for their rent. So people are paying rent with credit cards. They're paying for essentials, going to the grocery store, going to the gas station, and now using credit cards. Credit card debt rose 20.7% in February. What does this tell us? This is a major red flag. How much longer can over-indebted consumers keep paying more for less as the Fed begins to raise borrowing costs? Yes, that credit card, that interest that you're paying on that credit card is about to go up, ladies and gentlemen. These people that are reliant on debt, they're gonna pay more in interest and they're gonna get absolutely buried. So as I've said many times, do whatever you can to minimize your debt. If you can pay it off as quickly as you can. We are heading into a major slowdown while the Federal Reserve raises interest rates. Okay, the cost to borrow money is going to go up. The cost to borrow money to buy a house is going to go up. The cost to borrow money to buy a car, to use a credit card, going up. And it's going to happen at the worst possible time while you have an economy literally seizing up. So it's going to be a really, really bad time here. And I can't even imagine what this is going to look like by the end of summer. CNBC, the president says U.S. will send $1.3 billion in additional military and economic support to Ukraine. More debt, more spending, more inflation, ladies and gentlemen. And as you know, I don't get political, but I have to ask, where is this money coming from? And you know exactly where it's coming from. It's coming from you, it's coming from me. And this is the problem we have here. We cannot, as a country, stop spending money. Tax revenue at a record-breaking number again this year, and we have more debt and deficits than ever before. So, you know, it just seems to me that they could double and triple your taxes tomorrow. All they would do, it would never make a dent in the debt. They would just continue to spend more and the debts just get bigger. So the more money we take in, the more we spend. And so it's never going to end. The American dream is dead for the first time. Less than half of Americans believe they'll ever own a home. Well, when you have 1/3 of your workers making $15 or less, they're not going to be homeowners. You have massive student loan debt here at $1.6 trillion. You've got $1.06 trillion in credit card debt. You've got inflation running wild. People are going to be very lucky if they can afford to buy a tent at what we're seeing take place here. March sales were 4.5% lower than the same period back in 2021 in regards to home sales. With rates rising and prices significantly higher, the average borrower is paying out 38% more on the monthly payment than they would have a year ago on the same loan or the same house. Something has to give here, ladies and gentlemen. Something is going to break. The hedge, U.S. existing home sales slump near 2-year lows as mortgage rates soar. I don't know where we're at today, over 5%. May, June, with these rate hikes, I think really in June, we could be breaking 6% on a mortgage. And one thing I want to clarify is this. Right now, let's just say we're a little bit over 5%, 5.15% roughly on a 30-year. That's for people who have spotless credit, 20% down, but the average person doesn't have a 750 or 780 FICO. The average person probably has a 640, a 650, maybe a 670. They don't have 20% down. They're putting 3% down. So they're not getting 5.15% or 5.25%. They're getting 7% or 7+% right now. That's what the average buyer is getting. So how long before the housing market breaks? It's beginning right now. With rates rising and prices significantly higher, the average borrower, again, let me repeat this, the average borrower is paying out 38% more on the monthly payment than they would have a year ago. Who is going to be able to do this? Something, ladies and gentlemen, is about to break. Wolfstreet.com, as mortgage rates begin to bite, home sales fall to lowest since June of 2020. Home purchase activity is going to get very volatile. We usually see a pickup in home sales around this time as we're in spring heading into summer, and we're not seeing it, and I don't think we're going to see it. Home sales will decline as there are fewer buyers who can still afford to buy a home and fewer who can qualify to buy a home. Mortgage rates and inflation are going to cause serious problems. How long can the current owners hang on? As I said earlier, cash flow. Got to have cash flow. And if a spouse loses a job, or if wages are not keeping up with the rate of inflation, how long can people continue to make those mortgage payments? And heaven forbid there's an emergency in that household and whatever money they have saved up is gone. How do they keep making those mortgage payments? Elon Musk says he thinks inflation is worse than reported and likely to continue through 2022. I agree. He said, I think the official numbers actually understate the true magnitude of inflation. Musk noted some suppliers are requesting 20 to 30% cost increases for parts from 2021 to 2022, well above the 8.5% inflation being reported. We know that inflation is over 17% now. You know it. All you have to do is go to a grocery store today. MSN. The summer of revenge travel is coming, but no one can afford it. I can tell you from experience, booking a flight a couple days ago to head to the south and looking at car rental prices, room rates, very few people are going to have the luxury to jump on a plane and go take a vacation. Now, I'm not taking a vacation. This is purely business as I'm looking at ranches in the deep south. But I could not believe the cost to fly, to rent a car, to stay at a hotel. It's unbelievable. It really, really is. So how many people are going to throw, a family, say a family of 4 on a plane and take them to Disneyland or, somewhere in Florida or out here to California or wherever you may be traveling? The ticket cost is through the roof. Room rates, it's just absolutely incredible. And to think, for a family of 4, what this would cost just to eat at a restaurant for a family of 4 is just, I couldn't even think about that. But so my heart goes out to anybody out there watching this with kids. How you're doing it, I have no idea. I mean, at the price of food, it's just unbelievable. But there's just so much happening, ladies and gentlemen. Markets have not closed yet, but they are down. We'll see how the day finishes up. Feel free to comment about anything you want down below. But just watching some of the guests today on some of these financial channels, very ominous. And I was really shocked today that some of these people were actually being very, very honest and actually believe that we are about to turn the page here and enter something that we have not seen before. So I'll wrap it up. I know I'm ranting and I could go on and on and on, but be cautious out there. Be very, very careful where you're spending money and especially where you're keeping your money. These financial institutions are not as safe as they are telling you. And when you think about grids going down, cyber attacks, the fragility of the banking system, bail-ins, bailouts, be very, very cautious. I mean, this is the time where you really have to be thinking for yourself. Anything is possible. And anybody that tells you that these things are not possible, they're either lying to you or they're brain dead. Anything is possible today in 2022. So be very cautious where you're spending money and where you're keeping your money. Anything can happen now. Just like when I went to the bank yesterday, doors locked. Again, I've never seen anything like it. Through my whole life, I don't think I've ever been to a bank that when I walked up and pulled the doors, they were locked. I don't think I've ever experienced that until the past year. And it's becoming very, very common. So be cautious, be careful, exercise patience out there, ladies and gentlemen. Sales are coming. And this is a thinking man's game, a thinking woman's game. This is a chess match now. Let these people buy into the sucker's bet in these markets. Let them buy into the Ponzi schemes. The real money, the real thinkers are on the sidelines waiting because they know exactly what is going to happen. God bless.